I warmly welcome all of you from various countries of the ECOWAS sub-region to this seminar on exchange of information as a tool to combat offshore tax evasion.
Hello and welcome to Tax Matters. My name is Chiamaka Ohauchi. We'll begin with what are trending in taxation kingdom. Nigeria hosts WATAF seminar on exchange of information in Abuja. FIRS nets 4 trillion naira in the first 9 months of 2019. Nigeria moves higher on the World Bank Ease of Doing Business ranking. FIRS establishes non-resident persons tax office. The Tax Appeal Tribunal upholds electronic objection to tax assessments. And finally, CITN X-rays burning issues. Now to the details. Nigeria has hosted a 3-day seminar on automatic exchange of information amongst tax jurisdictions in the ECOWAS sub-region. The seminar was held in Abuja, Nigeria's federal capital, under the auspices of the West African Tax Administration Forum.
It is my hope that this seminar will broaden your knowledge and develop your skills on how to use EOI tools to combat tax evasion and improve domestic revenue mobilization in your various countries.
Executive Chairman FIRS Mr. Babatunde Fowler has announced that in the first 9 months of 2019, the FIRS has collected taxes amounting to 4.012 trillion naira. Mr. Fowler was speaking at the National Assembly on Thursday, the 24th of October 2019, before a joint section of the Senate and the Federal House of Representatives 2020 National Budget hearing. On Wednesday, the 23rd of October 2019, the World Bank released its 2019 Ease of Doing Business ranking, placing Nigeria at number 131 on the EODB. In 2017, Nigeria ranked 145 and dropped 1 step to 146 in 2018. The EODB is the measurement of indicators of ease of doing business worldwide. In another development, the FIRS has issued a public notice notifying the general public of the establishment of a non-resident persons tax office, NRPTO. The NRPTO will be located within the offices of the International Tax Department, located at the 3rd floor of the FIRS building at number 17B Awolowo Road, Ikoyi, Lagos. The office will become operational from the 1st of January 2020. At its sitting on the 17th of September 2019, the TAT Lagos Zone upheld a notice of objection to a tax assessment sent to the email address of the tax controller of the FIRS Lagos Zone. The tribunal held that the receipt of an email by the tax controller translates to receipt by the FIRS. The tribunal also held that the notice of objection, due for objection during a nationwide strike, was appropriately submitted as it was filed on the working day following the strike. And finally, CITN X-rays burning issues examines effects of VAT rate increase on the Nigerian economy, the Police Trust Fund Acts, stamp duties, and the new JTB taxpayer identification numbering system. Details of all these will come to you in a subsequent episode of Tax Matters.
In 2018, a total of 5.320 trillion naira was collected as taxes by the Federal Inland Revenue Service (FIRS). This is the highest ever collected as federal taxes in Nigeria. Taxes have become an important source of revenue, enabling the government to provide greater infrastructural developments in our country. Tax revenues enable government to provide more roads, more railways, more bridges, more housing, more schools, more students in schools, more hospitals, more security, and generate more power. Because Nigeria deserves more. Only your taxes can make all our dreams come true. This message is from the Federal Inland Revenue Service, FIRS. It pays to pay your tax.
Welcome back. Last episode, in bringing you the story of the launching of the new taxpayer identification number registration system in the North Central Zone of Nigeria, which took place in Ilorin, capital of Kwara State, we did say that one essential element of tax collection is the existence of a credible taxpayer database. That, we dare say, is the beginning of the process. Then comes assessment, collection or payment if you like, and of course, accounting for taxes collected. But as in all things human, disputes arise. In this case, disputes between the tax collecting agencies and taxpayer, be they individual or corporate. When that happens, the Tax Appeal Tribunal is the first point of call. We have dealt with the role of the Tax Appeal Tribunal in the scheme of things in recent time on this program. Since the inauguration of the second set of the tribunal on the 5th of November 2018, the 8 zonal tribunals have been busy, and we have kept you abreast of their activities on several episodes of the program. In Lagos, for example, where due to the large volume of cases, there are 3 panels. Several cases have been heard and judgments have been delivered. On Friday, the 27th of September 2019, Panel 1 delivered a judgment in a consolidated case involving United Capital Assets Management Limited and United Capital Trustees Limited versus the Federal Inland Revenue Service.
Both appellants are members of the United Capital Group PLC. The appeals were consolidated by an order of this tribunal made on the 20th of March 2019, since the appeals are similar in facts and issues. The respondent commenced a desk review of the affairs of UCAM from 2011 to 2016 and UCT for 2012 to 2016. The reference audits ran concurrently and were carried out by the same officials of the respondent. In this regard, correspondences were exchanged, a meeting held. At the end of the audit, the respondent issued a report for additional assessments for the year in question with a total tax liability of 3.982,489,609.25. UCAM disagreed with the additional assessment, but the respondent issued notice of assessment in the sum of 188,398,400 on the ground that UCAM distributed dividend to its parent company in excess of the profits declared. With respect to UCT, the audit report revealed assessment of tax liability of 1,606,859,651. The assessment was as a result of additional CIT, company income tax, EDT, withholding tax, and VAT, on the ground that UCT paid dividends in excess of its total taxable profit. Meetings were held between the appellant and respondent to resolve issues after the assessment were received by the appellant. Despite the protestations by the appellant, the respondent insisted on the additional assessment. Appellant's application to the respondent to serve assessed under the Voluntary Assets and Income Declaration Scheme, VADE, were rejected. This also was rejected in the same manner in the case of UCM above. Consequently, in November 2017, UCT received three notices of additional assessment. All three notices of additional assessment were dated October 26, 2017 and totaled 954,054,351. Following the appellant's failure to object to the notice of assessment within the 30-day window allowed by law and to pay the assessed tax, the respondent pasted non-compliance stickers on the appellant's corporate headquarters. Consequently, the appellant negotiated payment plan with the respondent. Thereafter, the appellant, on the 20th day of March 2018, filed 3 appeals, during the pendency of which parties met and discussed, culminating in the grant of 25% waiver to the appellant's parent company via notice of appeal dated March 19, 2018 at the Tax Appeal Tribunal, Lagos Zone.
The tribunal chairman laid out the issues for determination.
The respondent formulated the following issues for determination, to wit, whether the provision of Section 19 of the Companies Income Tax Act was properly applied to the subject matter of this appeal, whether the appellant was entitled to relief sought under the Executive Order 004 of 2017 on the Voluntary Assets and Income Declaration Scheme, and whether the appeal, lacking in merit, ought to be dismissed and the demand of the respondent ought to be upheld as claimed from the appellants. On the other hand, the appellants formulated 2 issues for determination as follows: whether, having regard to the provision of the company's income tax exemption of bonds and short-term government securities order of 2011, the respondent was right to subject the appellant to tax on exempt income, and whether the appellants are entitled to relief sought under the Executive Order 004 of 2017 on the Voluntary Assets and Income Declaration Scheme. The appellant counsel contended that the respondent was wrong in law to have subjected the appellant's income to tax contrary to the provisions of the Company Income Tax Exemption of Bonds and Short-Term Government Securities Order and Executive Order, made pursuant to Section 23 of CITA. Counsel further contended that the respondent ended law when he subjected the appellant to tax under Section 19 of CITA without regard to the most specific provisions of the exemption order. Mr. Akila argued that the respondent breached the provisions of the Executive Order 004 of 2017 on the Voluntary Assets and Income Declaration Scheme, VATES, we will henceforth refer to it as VATES, when he refused the appellant's application to remediate their tax affairs under VATES in the course of a tax audit. On his part, counsel to the respondent, Mr. Olaoluwa Aledaniel, contended that Section 19 of CITA was applied to the subject matter of the appeal as the dividends paid out by the appellants were more than the total profit declared. He asserted that the provision of Section 19 of CITA is anti-avoidance in nature, and the tribunal should adopt a literal interpretation of the provisions of this section. He stated that the appellants are not entitled to the relief sought under the Executive Order 004, as the appellants did not meet all the requirements to be able to take advantage of the VATES. In a further bid to persuade the tribunal to dismiss the appeals, the respondent counsel pointed out that the appellants failed to object within the time prescribed to raise objections to the assessment duly served by the respondent. He argued that the failure to object within the time scale rendered the assessment final and conclusive.
And then the judgments.
We have carefully considered the issues formulated by both parties and their arguments. In our considered opinion, the issues formulated by the respondent more aptly capture the questions that call for determination in the appeals. And it's on the basis of these issues that we will now proceed to consider the submissions of the parties. Issue 1, whether the provision of Section 19 of Company Income Tax Act was properly applied to the subject matter of this appeal. The respondent was said to have subjected the appellant to tax in respect of income exempt under the Executive Order. It is the appellant's argument that income earned on government and corporate bonds are exempt from tax under CTAC. Appellant counsel argued that it would be wrong to apply Section 19 in isolation of the exemption order, as the provisions of a statute must be read as a whole. He argued that the exemption order made pursuant to Section 83 grants special treatment to specific income, corporate and government bonds.
On the eligibility of the appellants to enjoy waiver of interest and penalty under the Voluntary Assets and Income Declaration Scheme,
the tribunal holds that the respondent is not entitled to charge interest and penalty on the unpaid portion of the assessments in line with paragraph 6 of the scheme, which provides entirely for the waiver of interest and penalties for any taxpayer who truly voluntarily declares his asset and income and complies with the regulation and guidelines and pay all outstanding tax. Issue 3. Whether the appeals lacking in merit ought to be dismissed and the demand of the respondent ought to be upheld as claimed from the appellant. It is our view that having resolved issue 1 against the appellant, issue 3 we have no leg to stand upon. Therefore, the issue is resolved against the appellant. In sum, and for the avoidance of doubt, issue 1 is resolved against the appellant, issue 2 is resolved against the respondent, issue 3 is resolved against the appellant. The respondent was wrong to have prematurely excluded the appellant from the scheme. The appellants are ordered to pay forthwith the 25% balance on the additional assessment, taking into consideration that an agreement in respect of the additional assessment raised was reached between the appellant and respondent. Lastly, the respondent is prohibited from charging interest and penalty on the balance of the said additional assessment. The appeal therefore succeeds in part. That is the judgment of this tribunal.
I can't believe this. Last year I let it go. This year my tax assessment is even worse. They keep doing this because they know there is no one we can complain to.
But there is.
Really?
Yes. You can go to the Tax Appeal Tribunal.
Tax Appeal Tribunal?
Yes.
The Tax Appeal Tribunal is established to resolve all tax disputes between taxpayers and the Revenue Authority. So when your tax disputes are not resolved to your satisfaction, the Tax Appeal Tribunal is there to help. You can visit any of our offices nationwide or call email info@tat.gov.ng for support. Tax Appeal Tribunal, building confidence in Nigeria's tax system.
Still staying with Lagos, on Wednesday the 16th of October 2019, Panel 3 delivered yet another judgment in a case involving Ike and Arifayan versus Lagos State Internal Revenue Service.
The fact of the case. The respondent, by a letter dated the 4th day of December 2015, but received by the appellant on the 18th day of December 2015, notified the appellant that following a tax audit of the appellant records and documentation for the 2013 tax year, a total tax liability of 7,247,591 naira had been established against the appellant. The appellant objected to the said outstanding tax liability for the 2013 through a tax consultant by a letter to the respondent dated the 12th day of January 2016. The respondent thereafter, by a letter dated the 6th day of October 2017 and received by the appellant on the 19th day of October 2017, notified the appellant that following a review of the appellant records and documentation for the 2013 tax year, a total tax liability of 7,159,943 naira 93 kobo had been established against the appellant. This revised outstanding liability was arrived at after the respondent had deducted the appellant payment of 159,773 naira 33 kobo, representing the undisputed tax liability. The appellant, upon the receipt of this second demand notice, again engaged its tax consultant to contest same. The tax consultant, by a letter dated 8th day of November 2017, further objected to the revised outstanding tax liability. The respondent, again, by a notice of refusal to amend NORA, dated the 2nd day of July 2018, received by the appellant on the 3rd day of July 2018, notified the appellant of a refusal to further amend the appellant tax liability. Consequently, the appellant filed the notice of appeal before this honorable tribunal, appealing against the first demand notice. Shortly after filing of the appeal, the appellant and the respondent enter into settlement discussions with a view to reaching an amicable resolution of the matter. During the settlement discussions, the respondent issued another notice of amended tax liability dated the 10th day of February 2019, wherein the respondent revised the appellant tax liability to 2,856,748 naira 28 kobo. The appellant again objected to this amended tax liability as well via a letter of objection dated 26th day of February 2019. As a result, the respondent invited the appellant for a tax audit review committee meeting, following which the respondent issued another notice of amended tax liability dated the 14th day of May 2019 to the appellant, wherein the appellant tax liability was revised to 2,413,417 naira 95 kobo. Following further settlement talks, the parties were able to resolve the issue of the principal tax liability of the appellant and thereafter drew up the terms of settlement, wherein the parties agreed, amongst other things, that the appellant shall pay the sum of 967,271 naira 55 kobo as the outstanding payee tax liability for the 2013 tax year, and that the payment shall be made in 2 installments.
However, after arriving at the agreed principal tax liability, the issue of interest and penalty arose. The parties therefore approached the tribunal once again.
The appellants were, however, unable to settle the issue of penalty and interest. They therefore resolved to submit the issue for determination through this honorable tribunal, and the tribunal thereafter directed the parties to address her on the issue of penalty and interest.
And then the judgments.
Having successfully proved under remittance beyond reasonable doubt, then the appellant is liable to pay penalty and interest on the established tax liability, relying mainly on the provisions of Section 82 of the Personal Income Tax Act, and also refuting the relevance of the cases cited by the appellant in its argument. On issue number 3, as to whether interest should be levied on the principal tax liability or on the next tax payable after the addition of the 10% penalty, this tribunal also took passionate view of the submissions and also considered seriously the provisions of Section 40 of the Federal Inland Revenue Service Establishment Act and Section 82 of PITA. It is the position of this honorable tribunal that, in view of the above argument and the analysis done by this honorable tribunal rules that the appellant is liable to pay penalty and interest on the tax liability established by the respondent. However, the interest calculation should be based on the principal tax liability and not on the net tax payable after the addition of the penalty. And this is our position.
The Tax Appeal Tribunal is there for all, for the tax collector and for the taxpayer. Embrace the TAT. Let us join hands to create a tax-friendly environment. Thank you for watching. See you next week.